There's just this wave of debt that is swept the entire world. It is not only more debt on an absolute basis, but it's also more debt on a relative basis, relative to GDP and relative to the amount of actual dollars that are out there. And the world is bankrupt. Most people just don't know it yet. So we're up 500% in 10 years. We're still only $1 billion just in change market cap, and think we can grow this to a 20 to a 30, $40 billion market cap company.
Welcome back to Liberty and Finance. We have a first-time guest today. Nolan Watson is the CEO and co-founder of Sandstorm Gold Royalties. He joins us here this Tuesday, December 8th, 2020. Nolan, thanks for joining us on Liberty and Finance.
Hey, thanks for having me.
We became connected through multiple channels. First, it was through Rick Rule, who's been an amazing source of connections for us because we were an anchor member of the Miles Franklin booth at the Sprott Natural Resources Symposium this summer, which wasn't in Vancouver like we expected it to be. We actually had our plane tickets just about to be purchased, and I was talking to Rick that day, and he said, I would hold off on that. We may be going virtual. In fact, we are going virtual. So that was, we were able to attend that virtually, as were other attendees. And in that conference, we met Kim Bergen, the director of capital markets for Sandstorm, and we had her on both in the show as well as after the show on our channel. And she was able to get us connected so that we were able to get you on. And it sounds like the next time, if we're able to get you back, Rick will join as a panel, and that should be exciting for our viewers as well. But we wanted to introduce you because you co-founded Sandstorm Gold Royalties in 2008, and having come from Silver Wheaton, now Wheaton Precious Metals, and while they're innovating the silver royalty model, and we want to talk about why that's so important to people. Kim gave us some insights into that when we had her on, but we'd like to really pick your brain about that. But first, if we could just get a quick understanding of how you got into the precious metals business, and then we'll talk about your view of the current status that we find ourselves in the precious metals, and then we can zoom in some more about silver royalty companies.
Yeah, thanks for having me. And yeah, this is a business that I took pretty circuitous routes to get to. It's one that I have fallen in love with. I enjoy. I started off actually in business school, and if you would have asked me at the time if I wanted to go into mining, I would have said absolutely not. That's the most unsexy, boring business in the world. I'd rather do biotechnology or something cool like that. But lo and behold, being in the city of Vancouver, there's a lot of mining companies. As soon as I graduated, I started articling on the finance side of things. And very soon, I think I was 22 years old, and I had a manager walk up to my desk and she said, Nolan, how do you feel about Myanmar? And I didn't know anything about Myanmar. I said, what is a Myanmar? And she said, no, where is Myanmar? And the answer is, you're going there. And they shipped me off to this military-run country in the middle of the jungle that I didn't even know existed, and to this massive mine. Fell in love with the mining industry, and kind of the rest is history. And so stuck with mining ever since, and been traveling the world to mines ever since, and buying mines and being involved in the royalty business. And so pretty early on in my career, I was the first employee at a company called Silver Wheaton. And Silver Wheaton is the world's first precious metals, what we would call a streaming company. We don't really distinguish that much in our business between streaming and royalties, but there is a bit of a nuance. A royalty is when you have the right to a certain percentage of the revenue of a mine. A stream is when you have the right to buy a certain percentage of the production from the mine at a fixed, artificially low number. So for gold, if you have a royalty, they will give you the ounce of gold for free. If you have a stream, they will let you buy that ounce of gold for, say, $400 an ounce. And you buy it for $400 on the same day, you sell it at spot, which today is $1,870 an ounce. And the difference is your profit margin. So Silver Wheaton was the first precious metal streaming company in the world. We grew it into a multi-billion-dollar cap from absolutely nothing over a period of a number of years. And then I left to go start up Sandstorm, and we've been growing it as a gold and silver royalty and streaming company for the last 10 plus years.
Could you talk to us a little bit about your view? You knew what the spot price of gold is today, so you keep an eye on the markets because it's part of the environment we're all we're all active within. So could you talk to us about your view as we wrap up 2020 here of what you consider to be the most promising and the most concerning factors of the current economic environment we find ourselves in first, before we talk about the gold and silver market specifically?
I think the scariest thing out there, without question, is the amount of debt that's in the economy. I'm sitting here in a condo in Canada. Canadians are currently the most indebted people on planet Earth as a percentage of GDP with respect to the individuals, not necessarily at the government level yet. That honor is held by the likes of Japanese people and Americans and, and whatnot. But just the amount of sheer debt that is out there at the corporate level, at the individual level, and now at the government level, it's completely and totally astounding. I mean, the Canadian government, we're just one example of many countries that are going through massive debt problems during this COVID time. But Canada last year, they ran a $340+ billion deficit. To put that in perspective, Canada in the history of the country had never run a deficit of more than $80 billion ever. And so we blew that out of the water last year, and they just announced they're going to run a $400 billion deficit next year. You know, Canada is less than 1/10 the size of the U.S. So
I was going to say these numbers sound proportionate based on my understanding too. We typically would run less than $1 trillion in deficit per year, and now it's going to be $3 to $4 trillion, and so it's similar. Yep.
Exactly. And so it's happening all around the world. It's happening in the U.S. I mean, a $4 trillion deficit. To put this in perspective, when you think about debt, you have to think about debt relative to what is capable of servicing that debt. And when you're evaluating what's capable of servicing the debt, sure, one of the things that we look at is GDP, which is a reasonable thing to look at. But one of the things that we typically look at also is how much actual money is out there. What is M1? M1 being the amount of dollars that were originally created by the Federal Reserve in the US. And M2 being, after the money multiplier effect, people take those dollars, they put them in banks, the banks relend them, so on and so forth. And so money gets created through the banking system process, and that becomes M2. And to put it in perspective, M1 has just been massively expanded because of the QE that's been happening, but it's still under and around $7 trillion. So if you think about all of the dollars that have ever been created in the history of forever, of 7 trillion, and the US is running annual deficits of 4 trillion. I mean, at that rate, every 20, 21 months, they are borrowing an amount of money equal to all of the money that actually exists every 20-something months. It's completely and totally unsustainable. It's the closest thing to a Ponzi scheme that I've ever seen up front in real life, except it just happens to be legal because the politicians write the rules and they're not capable of controlling their spending, and so they want to perpetuate it. And
maybe legal, but it's not rational or moral or constitutional, exactly. Really.
It's absolutely totally out of control. It's insane. I mean, I'm fairly politically involved here in Canada, and one of the reasons that I do so is I believe that people deserve a government that is run intelligently for the benefit of people. And what we actually have in reality in both Canada and the United States is our governments that are willing to spend unlimited amounts of money just to buy votes, and they're crashing the system. On top of that, we have fairly what I would say uneducated consumers who believe that they don't remember the old days of higher interest rates. And so they think interest rates are so low, they're just going to the banks and asking the simple question, how much money will you lend me? And the higher the number, the better. And I'm going to take all of it. And so consumers are getting incredibly indebted too. So there's just this wave of debt that is swept the entire world. It is not only more debt on an absolute basis, but it's also more debt on a relative basis, relative to GDP and relative to the amount of actual dollars that are out there. And the world is bankrupt. Most people just don't know it yet.
That grim background of the financial realities that we're facing from a mathematical standpoint, can you talk us to what the realities are in the gold and silver industry, both from a metals standpoint as well as a mining standpoint?
Yeah, I guess there's a lot of different ways to look at it. In our business, because we're a streaming and royalty company, it doesn't really matter to us so much what it costs to mine the mines as long as the mines are profitable. Because if we're getting 4% of revenue or 2% of revenue or 8% of revenue or whatever our deal is with a particular mine, we get that percent of revenue irrespective of what it costs them to mine the mine. So all we care about is that they actually continue to mine the mine.
And that, I mean, there's a relationship there that you want them to be sustainable. You want them to be healthy so that they can continue operations. Yeah.
Yeah. So one of the criteria that we look for when we're doing a transaction is this a high quality mine? If some mines in the world are going to shut off because prices go low for a period of time, is this going to be one of those mines? If it is, we're not interested. And so we focus on high quality mines where they can produce at low cost. And so we have built this portfolio over 200 streams and royalties where we don't really care what it costs the miners to mine. We're just collecting checks, and we're taking those and we're able to redeploy those and grow our portfolio and buy more royalties for our investors to further increase the size of our company, increase the size of our portfolio, and also increase the amount of cash flow that we get, which we can then in return pass on to shareholders through future dividends and whatnot. So the fundamentals of our business is really a question of let's go find new intelligent things to buy, and let's try to make sure we understand where we think the commodity prices are going. The actual cost of production is not something that we focus on too much. Now, having said that, if your listeners are looking at potentially investing in mining companies directly, that's a whole other story. The fundamentals of that business are a lot more challenged with the issue of what does it cost to mine the product. The main inputs in mining are, number one, labor. So all the people that are in your mine and mining the mine. And number two would be energy. So it'll be diesel, it'll be electricity. And the number three would be all of your other input costs and steel and whatnot. So when you've got situations like we have today, where a lot of energy costs, a lot of steel costs have been going down during the COVID period, labor costs are not going up as fast as they normally would, and the commodity prices have been rising, specifically gold and silver. It's a very good fundamental time to have invested in a mining company over the last 6 months. I do believe that's in the process of changing, though, for a couple of reasons. I think that the actual cost of mining those mines is going to start going up more. I do think that although there will still be a little bit of deflation during this COVID period, once we've washed our way out of this and some people have been vaccinated, we're going to start seeing unemployment drop, and therefore wages are going to go up. We're going to see increased power consumption because of increased industrial activity, and so your power costs are going to go up. And so mining mines is going to get more expensive. So your margins are going to be squeezed if you're a royalty company. Your margins don't get squeezed because as those costs come up, they don't affect us at all.
Only if they get so protracted that it actually affects the ability of the underlying mining companies to remain in operation.
Exactly.
Along those lines, Kim Bergen, when we interviewed her, your director of capital markets, she had talked about a litany of risks that you do need to watch out for when you're selecting. You said a high quality. So high quality, one aspect of that I understand is high quality mineral deposits. You want to make sure that there's a sufficient high quality ore and everything that's going to keep generating product that's going to be profitable for that company so that you can get your revenue off of them. But she also mentioned that there are geopolitical risks, there are other supply chain related potential for disruption, that kind of thing at this time. Are there any of those that seem to be coming more to the discussion or relevance this year, specifically because of all these disruptions and lockdowns and travel restrictions and everything that you didn't have to worry about as much in the past?
Well, COVID certainly has brought on its own unique challenges to the mining industry, obviously, with just trying to continue to operate mines with hundreds and hundreds of employees with this virus going around. And so you put controls and restrictions, and when employees go down, if at a mill you might only have two people who specialize in one specific thing, and if both of them go down with COVID, then you've got some problems at your mill. So those types of things are going on, but I don't think that there are any particularly unique things happening, at least on the labor side in the mining industry as we speak. I think that there are a lot of different considerations that you could look at to decide whether or not you think the fundamentals of the business are good or not. But I don't think COVID is really changing that much. I would say what Kim said is right, that geopolitical risk is one of the main risks. The number one risk in mining these days is not getting permits. So we'll invest in projects. Usually, if we're investing large dollars, they'll be permitted projects. Sometimes we'll get involved at the exploration stage. We'll buy a small royalty for small dollars on a project we're really excited about. But you have to assess what is the probability that the government in that province, in that country, in that state are going to give them their permits, not just to finish exploration, but if they find something to actually give them mining permits. And so understanding government tendencies around the world and their proclivities towards mining is a really important part of what we do, and that probability assessment is very, very important. Now, if we're going to go and invest $150 million in one particular stream of royalty, we're not giving them the money until they've got their permits. So we take that risk out of the equation as well.
It's interesting you mentioned what was maybe a value situation or a low-cost operation situation, maybe less of a low-cost operation system going forward. People are also watching the valuations of metals. They're watching the whole market. And Rick Rule has talked to us on multiple occasions. Even at the Sprott conference, he was saying that there'd been maybe a little bit frothy exuberance during the summer months in terms of some of the mining valuation, junior miner run-ups in valuation. And we've certainly seen in the last quarter and a half here, we've really seen I guess you call it a correction in terms of stock prices. And your assessment of the market as we see it from an investment standpoint, certainly would, I think you could argue from the cheap seats that values are more prevalent now than they were back in July, August, when there was that gold was hitting a new all-time nominal high, and it seemed like everybody was toasting with champagne glasses, and those valuations on junior miners were running up. Seems like people can get better values now, whether it's on a royalty and streaming company or a mining company. Is that what you're seeing as well?
Yeah, definitely, especially in precious metals. Typically in a cycle, you'll have high parts of the cycle where prices are high, and then at the bottom of the cycle, when everyone thinks gold and silver are obsolete now because the world is fine financially, and we don't ever need precious metals ever again, despite the fact that we've had thousands and thousands of years the predominant currency. But it goes through these cycles, and the portion of the cycle that we're in right now is one where you have a financial crisis or financial calamity like we've had that has been caused by COVID. And the first part of that phase of the cycle is everyone goes, this is a disaster. Everything's falling apart. I don't want to be in the market. I don't know what I want to own. I'm pulling my money out of stocks. I'm pulling my money out of bonds. I want to put it somewhere safe. Gold is the safe thing. And so they start investing in gold, and gold prices start running. Then we get to the part of the cycle where it looks like we can see a light at the end of the tunnel. So whether in this case it's a COVID vaccine or it's just increased unemployment and quantitative easing and the types of things central bankers are doing to get money rushing into the economy again, then people are kind of going, okay, I'm willing to dip my toes back into general stocks again. And so we're starting to see that. We call those risk-on days, where people are taking the money that they put in their mattress and they're willing to go and invest it again. We're starting to see that. In that part of the phase of the cycle, people go, okay, maybe the fear has abated and maybe I don't need to own as much gold as possible. And so we've been seeing that trade over the last, I would say, 4 months really. And then there's the next part of the upcycle that comes, which is, yes, things seem fine financially. Oh, they just printed 3, 4, 5, however many trillions of dollars that they're going to print. And money is no longer worth what money was worth last year. It's now worth half of that because there's twice as much of it chasing after the same number of finite goods. And that is going to work its way through the system in terms of valuations. And so hard assets are going to go up. Real estate's going to go up. Gold's going to go up. Silver's going to go up. And people start repositioning their portfolios to make sure that what they're investing in is going to go up with inflation when asset values reset themselves. And so the smart money starts going, sell bonds, buy real estate, buy gold, all that type of stuff. And so I think we're starting to move into that phase. And I think a year from now, we're going to see gold prices that are a lot higher than where we are today. I think we're going to see mining company prices higher than where we are today, certainly as Sandstorm, silver, and gold royalty companies. I think we're going to be a lot higher price-wise than where we are today. And I think we'll keep going as fundamental real assets revalue themselves. You
mentioned a strategy for organic growth by by basically acquiring additional high value assets and rolling them into your portfolio. We have a question from a viewer. JPH says, how would you compare Sandstorm's growth to your past streaming company? What are the differences between the two models and the growth results? Is especially relevant because you helped develop the model of the previous company at Wheaton Silver.
Yeah, it's a good question, actually. What I would say is when we first started at Wheaton, we were doing massive deals out of the gate. First deal was a couple $100 million, and then another $100 million, then $300 million, then $500 million. We grew the company from $0 to $5 billion within a matter of 4 years. And we then, as we started to learn more about the power of the model and the number of companies and types of companies that would want to do streams and royalties with us, we realized that there were all these incredible high quality assets that were just at an earlier stage, currently owned by smaller companies, that eventually those companies would invest, develop them, and then they would get bought out by bigger companies and would become big mines of big companies. And so we decided maybe we should get involved in some of this smaller stuff earlier stage so we can get higher rates of return for our shareholders. Yeah, but the challenge was when we went and started doing some of those small deals, we had some of our large investors kind of knock us on the head and say, what are you guys doing? You're a $5 billion market cap company. If you're doing a $50 million deal, that runs down to like zero. Like why? You're wasting your time. So please focus on things that are material to shareholders now in the context of the size of the company. And we kind of realized we had missed the boat that if we could do it again, which is what we're trying to do at Sandstorm, is you start small, every incremental deal is kind of the next intelligent deal on the size scale, and you keep getting the highest IRR that you can as you grow your company. So we've been going for 10 years. We, at Sandstorm, we're still only about a $1.2 billion market cap US. But if you take a 1,000-foot view from it, when we launched the company 10 years ago, we launched it with our first maiden financing to shareholders at $2 a share. And so we're standing here, that's Canadian. And so we're standing here today at $10 a share Canadian. So we're up 500% in 10 years. We're still only $1 billion just in change market cap, and think we can grow this to a 20 to a 30, $40 billion market cap company. So where we're at in terms of that growth cycle is we're going to now continue to do deals that are slightly larger than the deals we did over the last few years. We'll just continue to keep iterating the model until we're a big company, and then we'll do a mic drop and I'll go start something up again. Well,
there's a question here from Haji Lambris who says, will you distribute dividends and when? Speaking of the way the big companies operate.
Yeah, my personal belief is that companies exist to make money and then return it to shareholders. And so we have been using our cash to grow. We've been an aggressive growth company. And we have a clear mandate from our board to continue to be an aggressive growth company and using the bulk of our cash flow to continue growing fast. Having said that, I believe now we have reached a point where we've got over 200 streams and royalties in the portfolio. We're getting cash flow from all over the world. We don't need all of our cash flow to grow. And so I am starting to put my eye towards paying a small dividend to shareholders that then hopefully over time would continue to increase. So I don't know the exact timing of that some of that is subject to my board, but I'm thinking 2021 would probably be a decent year to start.
Speaking of 2021, my next question was, here we are at the end of 2020, people are looking ahead, and Windsor 4270 says, ask Nolan what new cash flow projects are coming online in 2021 and the name of the assets. So if there's anything you can talk about that's coming up, people would love to know.
Yeah, we had one just recently turn on called America's Gold and Silver. They've got a project down in the US. It's a heap leach. They just turned that on. And so we expect in 2021, that'll start ramping up. We've got a number of other mines that have just recently started up. Fruta del Norte, that's in Ecuador. 2021, we think that one's going to start ramping up. We've got a couple of other assets. In fact, the biggest asset we have in our entire company, it's an asset in Turkey. That is going to account for a very material percentage of our production once it's up and running. We believe that asset's going to start construction by the end of 2021. So we need some permits at the beginning of 2021, and then that mine will start being constructed by the mining company who's operating it, called Lydia Made in Chile. And so 2021 will be a really big year for us.
Okay, so we're short on time, but I'm going to ask you two questions, and they're connected at the hip. The first one is, of all the risks that you have to be cognizant of all of the factors that are happening in our unpredictable world right now, what would you consider like to be the number one thing that, I won't say keep you up at night, but that you have the most pause and the most concern about for 2021 going forward, as far as it's going to affect Sandstorm? And then secondly, what do you see as being the most promising hope that you have and reason you have for that hope for 2021?
I think both of those questions are good, and I think the answer to them is the same answer, which is, I am a firm believer. Let me take a step back, actually. So if you talk to a lot of CEOs who run precious metal companies and ask them what they think the gold price is going to do or what the silver price is going to do, they will always tell you, 10 times out of 10, they will tell you that the gold price is going higher. They're a big believer in the gold price. It's almost as if they're paid to tell you that and tell it to you no matter what. And so I, from the very beginning of my career, took a very different tack than that. I've been a guy who has always been forthright with my shareholders. I started off really young as a CEO. I was in my 20s when I started Sandstorm. And I believed that if I wanted a 30, 40, 50-year career in the industry, I'd be better off telling people what I actually thought about things. And so when I believe gold prices are going down, I say it. In fact, if you go over the transcripts of Sandstorm's quarterly earnings calls over the last 6, 7, 8 years, you'll see me say when I think gold prices are going to go down next year, and you'll see me say when I think gold prices are going to go up next year. And I've so far been fairly accurate in those predictions. And with that, and for those of my shareholders who know that I always tell them what I'm actually thinking, never in my career have I been more bullish in the medium to long term on precious metal prices. The fundamentals are just too strong. The value of currencies has been debased too greatly, and it's going to work its way into asset prices. And so my great fear, but also the great opportunity for Sandstorm, is making really intelligent, really large acquisitions. The fear is that I can't buy one of those really large things at a price that I think is reasonable right now, and that we come out of this great opportunity with nothing to show for it but our existing portfolio, which at the end of the day is not the worst case scenario, because we already have over 200 streams and royalties. If gold price doubles, our share price is going to go up dramatically. But I do believe that there is an opportunity here that if we are intelligent, hardworking, and wise, we will do everything we can to take advantage of it to get our company larger now before the prices starts running. And I really do think the clock is ticking on that. And I really do think precious metal assets across the board are going to get a lot more expensive going forward. And so I want to buy a bunch of them now.
It's interesting because we often speak with Andy Scheckman, the CEO of Miles Franklin Precious Metals Investment. He talks to us at a retail investment level about availability of finished bullion product, that sort of thing, availability, scarcity, opportunity, that kind of thing. And it's interesting how parallel, now you're talking at a completely different realm, but the same factors come into play. It's like seeing in your mind and in your gut these moments of opportunity that present themselves and taking advantage of those. So we're going to put in the description of this video the basics about how people can find out more about Sandstorm and about the ticker symbol and all that sort of thing. But is there anything that you'd like people to know about how they can get more information about Sandstorm?
Our website's got an enormous amount of resources that is very helpful. We explain things very basically, so I would start there and go from there. What I would do is give a caveat to people who think they like precious metals but don't know a lot about mining. Be very careful about investing in mining companies. A lot of novice and new investors get burned that way because they don't understand the technicals. I do believe that investing in royalty companies is the safest way for people who believe in precious metal prices that don't know a lot about mining. And whether it's Sandstorm or one of our competitor royalty companies, I do think that is the way to go.
Yeah, there seems to be a lot of mutual respect among the better companies in the industry, and that's healthy to see. But there's also the cautionary wisdom is to be very wary of some of the more speculative exploration companies or junior miners that don't have a proven track record yet. So really appreciate that for our viewers, because we really are trying to help people be aware and prepared, and that's part of the awareness part. We've been speaking with Nolan Watson, the CEO of Sandstorm Gold Royalties, here this first time on Liberty and Finance. Nolan, just thanks for joining us.
Well, thanks very much.